Hey everybody, it's Chris Lamm. I hope you're having a great day. This is the month of August. We're going to talk about the Fed and their impact on housing. We're going to talk about mortgage rates, and we're going to talk about housing stats, what we see going on in the housing market. So I want to just remind everybody that the Federal Reserve has two jobs, and basically, to make it simple, they need to keep inflation low and they need to keep unemployment low. And since the beginning of the year, when we started seeing inflation tick up, the Fed has raised the Fed rate, trying to slow down the buyer demand, which will hopefully in turn get inflation to start going down. Now that hasn't happened yet. So this month, last month in July, we saw the Fed raise rates yet again by 75 basis points, which is going to impact people's ability to borrow money, credit cards, consumer loans, car loans, and it already is leading to a slowing in our economy, which hopefully will bring some of the costs of everything down. Now what's the challenge, and you guys are probably hearing this, is hopefully this Fed is going to bring inflation down without destroying the economy, creating more volatility in housing, stocks, and unemployment, hopefully keeping unemployment from going up too high. Currently in August, unemployment is a factor. There is still a tight job market out there, do not get me wrong. However, we are seeing companies like Amazon, Bank of America, Walmart, and many large corporations put out publicly that they are going to be cutting down or reducing their workforce. And we are starting to see that a little bit on a local level as well. So the trick will be, how is that going to affect housing? How is that going to affect volatility with stocks and other equities? And no one really knows right now, but we're going to touch on interest rates. Mortgage rates have gone up faster than they ever have in history. And currently in August, we're actually seeing that we've had a little reprieve and mortgage rates have come down. We saw rates get as high as 6.5% not long ago. Currently in August, we're seeing rates back down into the low to mid fives. Many buyers that were not wanting to purchase a home because they were concerned about rates, concerned about the overall economic conditions, are now stepping back into the market and feeling a lot more comfortable paying a payment at a 5.25% or a 5.5% than they were at maybe a 6.25%. We're also seeing a lot more inventory on the market, or homes for sale, and more willing sellers to make a deal. Many homes are going below asking price. A lot of homes the seller will pay all the closing costs for the buyers. And the big question for everybody is, are we heading into a crash? Is this going to be something where we should wait and get a house at a lower price? And I think I said this on the last update. No one really knows what's going to happen at this point. And there's a couple guys that I follow think there's one of two outcomes. And one outcome is this is a very short-lived, 6 month to 12-month cycle, and housing does not crash. We do see more inventory like we do now. But the reality is that a lot of buyers end up getting a much better deal than they could have got, during the pandemic and in 2021. And we're actually seeing that right now. We've seen deals that we have not seen in a long time. And this is a nationwide trend. For those of you who don't know, I'm in a coaching organization nationwide with other people in my industry. So I talk to guys all over the nation in big metro markets, smaller towns like Reading, all over the country. And this is a trend that's going on everywhere. In fact, some areas still have very tight inventory, places like Tennessee, Florida, where there's still a large migration of people. So to wait for house prices to come down could cost you. But we do know this: if someone buys a house today, they're going to get a rate that's somewhere in the fives. And even if prices went down a little bit, they're not paying rent. And pricing on homes over the last 60 years, even when markets have retracted, they have always found their way appreciating over the long term. So it's anyone's guess what's going to happen, but that's kind of what we're seeing right now. And of course, we'll be updating you as things go along. Let's talk a little bit about housing activity. There has been a lot of buyers, mostly first-time buyers, over the last 2 years that have been priced out of the market. These are buyers that have a willingness to buy. They don't want to rent if they can avoid it, but because of home prices going where they went and now interest rates being higher, they have not been able to purchase a home. Well, I'm happy to say that not for everybody, but for many first-time buyers, they are now entering the market and they're able to actually write offers on homes and not worry about 20 other people writing an offer on the same house, not having to pay $50,000 over asking price. In many cases, like I said, getting homes at deals we have not seen for a long time, and the seller is even willing to pay closing costs in many cases, allowing us to buy the interest rate down and effectively lower the rate that they would usually be getting, helping them to get a payment that they can afford. So we're happy to see this, and hopefully this continues to be the trend. Obviously, as anything happens, we're going to be updating you guys. And the last thing I'll just say is I just appreciate everybody. We're so grateful that we have so many great people in our community that refer us. I've been doing this for 20 years, and I've got clients that have used me on all of their homes and referred their kids to me, and we just want to say we appreciate you. If there's anything I can do for you, or if you have concerns or questions, if you're transitioning out of California for some reason, please let me know. I am licensed in multiple states, and I'm always here to help. All right? Take care. God bless.